Of course, Dani Hughes, a legend in her own mind. No, I'm just joking. She's fantastic. Divine Capital CEO. Matt McCall, founder and CEO of Payne Capital. By the way, Scotty and Heath are with us. They're coming out later, but we've got to dig into the first real deal. And this market's all over the place, so we had to bring in the big guns. Come on our show.
Only if the rest of the world is so weak that the dollar goes through the roof. I think the big risk right now is the dollar exchange rate overshoots.
All right. Well, what do you think, Dani? What do you make of this?
That is absolutely the risk. And don't forget, too, we've been talking about the Fed raising rates, right? Because we're seeing this economic expansion.
Let's get it out of the way.
We've got all of these other central banks actually lowering rates. And so we can't exactly go in the face of that unless we're absolutely ridiculous in thinking the U.S. is going to
Stockman, you like those tech stocks today? Cons, very low credit operations. Those stocks have been whacked. Dollar stores are moving sideways. But the Targets of the world, do you think the spending continues up that ladder? I think
it has to, but the real thing that we have to look to is wage increase. Until we see a real meaningful increase.
Well, what did you make it at 5%? That big spike for January, was it real or just sort of
Well, we have to see the consistency over time, and we really haven't seen that part of it, Charles. And something interesting out of these numbers is what we saw out of the credit unions. Credit unions actually have been giving a lot of credit to people, and that's the biggest increase that they've seen since
the 1990s.
So
I'm not as concerned about the whole credit thing. As you kind of mentioned, John, the total...
You feel good about it.
And they wouldn't have been allowed to do that unless that's the...
So, Dani, how come the rally didn't fall apart?
And one of them was a little bit dovish, too. Yeah. I think because, you saw oil back off, and there was that note yesterday from Citi saying, oil is going to 20. Because
anyone buying the oil 20 thing?
Yeah,
I mean, come on.
No, but it did back off a little bit. It did, and agreed, but it did back off a little bit, which I think gave some more room to this rally.
Although tomorrow we'll get the inventory numbers. Who thought that?
People don't want to get in the car. People don't want to be active and do that. This is the most inactive. It's so easy. Just a flick of a switch, you're paying, you're done.
You're buying all of it?
It's easy, but the thing is, it's still like using a credit card, to Matt's point. You still have to load up your credit cards and your bank information into Apple Pay, and there's really only three big players, like you were mentioning
Once you do that, it's done, though, right? I mean, after that, you get your direct deposit, and that's it. You always got cash in your cell phone.
It's done, but you're still, I think that this technology that has become ubiquitous has made us a lot more cognizant of the money that we're spending in real time, instead of the cash that just goes out of your wallet and you didn't know how much cash you had.
Why
in the
is
first place.
Uber?
You're getting an email telling you just spent $4.99 at the such and such.
But why is Uber and
Because they're in so many retailers already, it's going to be tough to beat them to the punch.
There's a tremendous amount of M&A activity in this space, actually, and there's a lot of companies that are trying to make it a lot more secure for you and your kids to spend money on a credit card. So that, I think that activity is going to bring more players into the market. Right. Like we were saying, there's really only three players.
So what do you like?
I like Apple. I also like PayPal, though. I'm a big
Apple is $710 billion. You like a name stock portfolio, have about 70 to 80% in long term, and the rest in trading money, that they can try to play the volatility. And really, you swage both of these things. I don't know about you, but that's my philosophy.
Yeah, I think, too, that people like to jump on a bandwagon as it's happening. And oftentimes, that's the wrong time to buy a stock or a sector. You want to buy things that are really out of favor.
But oftentimes, that's a way to make a quick buck if you do it right.
That's your department. I'm the long-term girl. So.
Yeah, I like that philosophy of, I call it core and explore. Your core holdings and your explore is kind of your play money that you swing trade with.
And my goodness, at 2%, the 10-year Treasury yield is a screaming buy.
It's inviting investors overseas to the U.S. It's continuing that flight to the United States, to equities in particular right now. And even though, while we're still in this very, very low interest rate environment, that's going to continue. But we've got that 1-2 punch. Don't forget, we've got low oil. So the consumer is benefiting both from the ability to buy better and to travel.
I don't want to ruin this little happy party you have going on here, but you think about the multinational that you mentioned on the screen that are selling a lot overseas. Well, they can only do one of two things: they either lower prices to keep up with their foreign competitors, or they sit in there and they risk losing market share. So I think it is a major concern. Too many companies are relying on the dollar being strong as an excuse. Charles, you talk about that a lot, but I still think it is affecting them, and it could, if the U.S. dollar continues in that trajectory, could be an issue next couple of years.
It's affecting them, but they're hedged, too. Don't forget. I mean, they've hedged themselves out for a long period of time. But to your point, about 50% of the S&P 500's earnings come from overseas.
All right, so let's talk about then, how do people make money off of this? Because I think a lot of times the audience feels, at least the way they speak to me, is that there's two conversations always going on. One about how happy we are because everyone on Wall Street is making money, but they don't feel it. They still, unless someone's planning a trip to Italy, they don't get it,
It's true. But, the retailers are actually the place, I think, where we've seen the most bang for the buck. And I like Home Depot. I mean, that's one name that I think, and it's rising for a couple of different reasons. Also because of the mortgage rates and because people are actually spending more money in their homes rather than going out and buying a new house. But that stock's been on a tear.
So upon further review, should the government just drop all of its opposition to the private sector, which seems to be upping their game as well as everyone else's game? What do you think about that?
In some cases, maybe, but not in this case. I mean, look, it's a $60 billion a year business, the U.S. Post Office, right? But it's losing so much money, Charles. It's losing $5 billion a year, and they have got $23 billion in debt. So who exactly is going to take that over? Not to mention that the two biggest private companies, FedEx and UPS, actually rely upon the U.S. Post Office.
I think UPS would take them over if they can get rid of those legacy costs.
No way.
Right, those legacy, even like, the Venus thing. I think they have a trip to Jupiter planned. I think all of that's kind of cool stuff, but let the private sector, already the private sector is nudging them. What if they could actually take it over?
So maybe some ancillary services, I think, would be helpful. But you've got to remember, too, that, it is a federal government agency. So if you steal something from the post office, it's a federal offense. They were talking about putting some U.S. Post Office outposts in Staples. But if you steal something from Staples, it's not. So you've got all of those issues.
I have to tell you something, Dani. My postal
Undervalued tech play. If you want to take a flyer out, look for value technology. I do like it.
Dani, didn't we just do a segment on pops versus investments?
Yeah, we did. We did. But this company is not making any money. It's been around for a very long time.
You see that cash flow?
It's doing okay. But this is when Matt says something's volatile and he can't handle it, do you think I'm going to? No way.
You don't
no
want
way.
to mess around
No,
with
thank you. No.
You like anything in technology that's not at a 52-week high?
I like a lot of technology names. A lot of them are at 52-week highs. But if they're paying me to wait,
What about
I'll
Intel?
take it.
Dividend about 3%, pulling back from a 52-week high. I like that one a lot.
I like it. I like IBM. I like Apple.
Anybody follow Micron?
A president that cares about jobs. This is an excellent opportunity. Private funds are going into it. Not many tax dollars, and yet in this case, he chooses to buy a solar panel.
I love these segments because this is when Dani starts to really get. See that? I don't know if Dani, the capitalist, kind of understands, and the taxpayers on one side.
Can
but
you
Dani,
see the solar steam coming out of my
But
ears?
Dani, who's the tree hugger, and it's like, we can do it all. So where do you stand on this?
Solar capacity in the United States has actually gone up about 400% in the last 4 years. And it still only represents not even 1% of electric generation in the United States. So we've got a long way to go. And there are some places where it makes a lot of sense to either buy or lease solar panels to put them on your house and to actually come out great at the end of 30 years.
So after the close, we had a whole bunch of companies that reported. How are you guys feeling about the rest of the week?
I'm feeling pretty good about the rest of the week. We're keeping our eye on earnings. I think that's really what's driving this market. And oil pricing, I don't think that it's going to back off from here. We're still exposed in oil and some oil names.
After the bell, Akamai